So the 8 Quanta estimated landed cost solution for NetSuite is it leverages standard NetSuite functionality along with some specialized utilities that provide an end-to-end landed cost solution for NetSuite. To give you an idea of how this works, we configure landed cost templates with cost categories and assign those to inventory items. When items are ordered and received, the item receipt generates, and that generates an estimated landed cost to that receipt. When you receive a vendor bill for landed cost, you put the actuals in at the end, and then we have some tools that allow you to reconcile any variances that would result. To give you an idea of the process flow of this, a purchase order is entered, and then the vendor will ship it somehow, whether it's just a regular vendor shipment, whether it's an inbound shipment or some sort of containerized shipment. That then results in one or more item receipts. At that point in time, the estimated landed costs are calculated using the template. And the templates will make a little bit more sense as we walk through this, but the template is basically a collection of cost categories of different types of expenses that one might occur on a given shipment, whether that's customs or duties, actual shipping costs, fumigation, any expense that would be related to a given shipment. At that point, when those costs are calculated, your inventory is updated and the average cost is updated based on that landed cost template. Then later on, we would receive a vendor bill for those items, pay it as normal. Off to the side here now, we're going to typically, at some point later on, we're going to get a separate bill for the actual landed costs. Most often that seems to come from a third-party shipping vendor, although it can come from the vendor of the items as well. It just depends. But generally speaking, we'll get it from a third party, and then we need to account for those landed costs directly. So we do that by entering a what we call a landed cost charges vendor bill, and that utilizes a standard NetSuite vendor bill record with a custom record and some fields on top of that that allow us to leverage the additional information needed for the landed costs. Once we enter that landed cost charges bill, we can then reconcile the estimated costs that we accrued over here to the actual costs, and then we provide a series of automated options. We can allow automatically generate journal entries to post a variance either to COGS or to inventory. We can revalue the inventory at that point based upon the actuals if the customer wishes to do that, and that will clear out the variance account to the average cost. We also offer them the option to update their landed cost templates automatically based upon a couple of different parameters, and we'll see that as we walk through. So we're providing them a lot of time-saving features as well as automation and a great amount of detail to analyze their estimates to their actuals and figure out how they can sharpen their pencil, so to speak, going forward. So that's kind of the flyover. There are of the process. There are two phases that we've identified really for this. There's setup, and then there's actually using it, what we're calling the operational phase. And we're going to focus first. Well, I'll give you the flyover of what's involved in setup, and then we're going to jump right into the operational piece of it. So with the operational, there's two sides to that. You have NetSuite order to cash. So we provide some tools on that side, which we'll see, and the procure to pay, which we kind of looked at from a process flow standpoint. As far as setup goes, we're going to move around the clock clockwise here. We basically need to set up, the first thing we do is identify the various GL accounts for the types of costs that they need to track. And we are requiring 3 different sets of accounts for all of those information. An inventory variance account, an inventory suspense or clearing account, and a COGS account. So for instance, if we're tracking freight, we need an inventory variance account for freight, a suspense account for freight, and a COGS account for freight. And we'll walk through that a little bit later. Once we have those accounts identified, then we create what I mentioned were landed cost categories. And those are the different charges that you would incur on a shipment: freight, customs and duties, those types of things. Then at that point, our application automatically creates what we call landed cost items, and those are other charge items for purchase. And we automatically add those because those are a critical piece of the equation. This is how we enter our actual costs at the end. So we create a one-for-one landed cost category to landed cost items, and that's handled automatically in the application, so the client does not have to worry about it. If they add a new one later here, they're going to automatically have an item to use for their actuals. Once we have our landed cost categories and automatically created items, we're then going to collect those into landed cost templates. Again, those templates are collections of landed cost categories. So that would apply to a given shipment. Once we have our template or templates defined, we're then going to update our item records with whatever templates apply to them. That can be done via CSV import, and you do need to set one template as preferred, and that is what our code uses to do its calculations. Okay, we've called these 3 pieces of information the critical information triangle because that we need these 3 to make this function correctly. We have to have the right GL accounts, we have to have the right cost categories, and those have to be coupled with landed cost items. So all 3 of these need to be in place for us to actually use this thing. Any questions so far? Okay. Or are we deferring those to the end, I think?
Well, we can deal with 1 or 2 as it goes forward. I really see that my first question might be, can I have more than 1 template per item?
Yes, you can pretty much have an unlimited amount of templates on an item, but one needs to be marked as preferred. And we'll see that you can actually change those later for different scenarios. So that'll make a little more sense as we walk through it.
Thank you.
Okay, I mentioned the operational phase sort of contains 2 sides. On the order to cash side, we can do estimates and margin analysis if someone is doing an estimate for one of their clients and they need to really sharpen their pencil and look at different scenarios and weigh landed costs into that equation. And we do estimated landed costs on the item record, which I'll show you later. And basically, this will allow you to see your average cost and your price level margins and make some good decisions based on your true cost of the item, the actual cost of the item, and including the landed costs. On the procure to pay side of things, we do a purchase order, which is standard NetSuite. And at that point, we're sort of leaving the standard NetSuite scenario because our code kicks in at the item receipt. And then we're doing the vendor bill for the item. This is also standard NetSuite. Yeah, but our standard bill, or our vendor bill for landed costs, and then any variances and reconciliation. And again, there are options at that point are to write those variances off to average cost and inventory, or write them off to COGS. And we'll go through that as we walk through here. All right. So the first thing we do, obviously, is we create a purchase order. And when we add those line items to the purchase order, the preferred landed cost template is what comes up by default. You have the option at that point to change it to something else. Let's say normally you ship by boat, by freighter, and in this case you need to get it in a hurry, so you're going to ship it by air. So that gives you a totally different cost scenario for your template. So you would change that in this case, by my example, to an air container that you've defined on there. You also, even if you can also change the scenarios mid-flight as well. So if you're using your shipbound container here or shipbound template here at the time of item receipt, you can also change it to there. Because the purchase order is non-GL impacting, that can stay the same, and you can make that change mid-flight when you're at the item receipt time if you change scenarios. Okay, so as we're doing our item receipt, this is an actual saved one here, but one of the requirements in setup is that we enable the landed cost per line, because our code calculates landed cost per line. So this will always come up checked when you do the item receipt, and they simply save the item. So in this case, we're basically doing an item receipt. There's no real surprises to it other than you're going to see this checked by default.
So Bob, you're telling me you support an inbound shipment or a container there or multiple POs and the item receipt? Is that what I saw, the landed cost vendor bill? Or what was that landed cost vendor bill with lines underneath those bills? Is that item receipt multiple POs, or is it singular, or is just exactly what goes on this item receipt?
Okay. I had mentioned that this was sort of after the fact. So this screenshot was not a data entry screenshot. It's a later on. So you can see that this item receipt was part of this inbound shipment, number 29, and it was also created from this purchase order. So the inbound shipment was received that resulted in this item receipt later on. So yes, we can receive an inbound shipment, and that will result in one or more item receipts for the items. This landed cost vendor bill, we add after the fact. We do lots of transaction cross-linking between the various transactions that make up this whole transaction tree, so to speak. So this is a convenience to the customer when they're analyzing things later and they want to look at the results. So this doesn't happen until we enter our landed cost charges bill later, and then we're going to add a link to the item receipt as well as the bills, and you'll see some of that later. And this just allows you to jump around between the different transactions more easily as someone who is analyzing the costs in depth. That's a convenience to them.
Thank you.
Okay, when we're actually saving, after we've saved the item, the landed cost or the item receipt, I had mentioned earlier that we're going to calculate the estimated landed cost based on the template at this point. So by clicking this icon on the individual lines under landed cost, once you've saved the item receipt, it will pop up a list and show you the estimated landed cost calculated for that line. Okay, you can also then see the roll up for the whole item receipt by clicking the landed cost subtab, and that will show you the roll up of all of the line items. One differentiator from standard NetSuite here is that NetSuite will show you a list of every cost category that you've defined, whether or not it has an actual value. So there'll be a bunch of blank items in here. We're limiting that list to only the actual cost categories that are used on this item receipt. So it's visually a little easier to navigate. Okay, this is a shows you the GL impact of a more complicated, item receipt scenario where there were a lot of different, items or a lot of different cost categories, and you can see the GL impact of the various, accounts that are involved here. So again, at this point, this is standard NetSuite behavior, and we're just showing all of the, interaction within the system of all the different accounts that are hit.
And Bob, I think this is for the accountants in the room. I think it's very good to note here that every debit that says inventory asset is part of the landed cost accruals on that template, and they're all being added to the item and to the average cost of the location of that item in NetSuite. It's a very granular look, but it definitely shows you all the landed costs are part of the average cost of that item.
Absolutely. Okay, so we've created a purchase order. Products have been shipped to us. We received them. Now we're going to get a vendor bill for the actual items. No surprises here. We're just going to, enter that vendor bill as normal. The one thing we do add to that vendor bill is I mentioned earlier that sometimes the vendor will also bill us for landed costs. We do provide a button once the vendor bill is saved, so you can actually jump right from this point, from the standard vendor bill, to create a landed cost bill as well. Most often they're going to navigate from the menu, but we do provide this option. All right, now we're going to get our actuals. So we've dealt with our estimates up to this point. Now we're gonna jump into some actuals. So assuming we get that bill sometime in the future, from the NetSuite Classic menu, we're going to navigate transactions, landed cost charges bills, and then a new landed cost charges bill. I'll give you some details on these other two menu items a little bit later. Right now, we're just going to create a new landed cost charges bill, and I did not include it here, but you're going to be presented with a screen prior to this one where it asks you to select a vendor. And this is the vendor that you're getting the landed cost charges bill from. So it might be FedEx or some other type of shipping company. So they do need to be a vendor within NetSuite already. And once you select that vendor, then it's going to pop up this screen here. And you're going to be asked to enter some appropriate data. Sorry about that. I'm misclicking here. All right. Okay, so you're going to fill out the required fields, whatever the client system is configured to do. In this case, it's whatever the vendor bill number is, location, department, class, and our application will require whatever fields the client requires to be filled out here. And in setting up the landed cost charges bill and entering it, we do need to enter any of these required classification fields at the body level as well as the line level. So both will need to be filled out, and the app will flag you if you miss one down on the line item. So just as a heads up there. Okay. Next, once we have that information filled out up here, we're going to enter the appropriate source documents. So whether you might enter one or more purchase orders here, one or more inbound shipments here, or transfer orders if the client has an overseas warehouse facility and they're simply transferring inventory across the pond, so to speak, that would incur landed costs. So we can deal with those as well. So let's just work with a purchase order. Let's say a purchase order 1, 2, 3, 4, 5. We'll enter it here and tab off. Once you tab off of that field, then the application will go collect all of the related records. and it's going to populate this here, the line items down below. They're called cost categories here for reference. This is where we use what we call the landed cost items, and those are the actuals that we enter. We name, the application names those exactly the same as the cost categories, so they're sort of used interchangeably, but from a back-end application perspective, that's what's happening. Once you tab off of that field, if you've entered order here, it's going to say, okay, I have here's the item receipts that have not yet been incurred landed cost charges. What ones would you like to select? In this case, we have one, so we tick the box here, click OK, and that's when all of those fields are populated below. So the application is going to read in every cost category, every landed cost item that was included on the estimated template. And as a data entry aid, we're going to show you what that actual estimate was. Okay, so in this case, we had miscellaneous charges that were on the template estimated at $20. We got a bill now, and that could be $20, might be $25, it might be $15, whatever it is. We're going to plug the actual in here, and so on all the way through. So this is just a quick reference to the person that's actually entering the landed cost charges bill. Here's what your estimate was on your template, plug your actuals in here, and off you go. And any required fields that are required up here will also be required here. So department and class, or department, actually, no, we don't require any of those in this case, but those would also need to be filled out as well. All right. Okay, so once you've actually, let me back up for a minute. We also have some other optional fields here. So if you can add additional cost categories or landed cost charges on here that weren't on the template. So let's say your vendor billed you for some extra stuff that was not on the template. You can add those right here. Obviously, there won't be an estimated amount, but you put the actuals in, and you'll be required to put a description in at that time. So let's say they billed you for fumigation, and fumigation was not on your template. You would put fumigation down here and add a description of what that was. And I should mention that has to be a legitimate cost category in the system. You can't just type extra charge in here. It has to be a real cost category already in the system in order to be added as an extra charge here. If their permissions allow, their role permissions allow the person that's entering the bill to modify landed cost templates, we also have the option here to add that extra charge to the template. Let's say it was a fumigation charge, and we've decided going forward that that's going to be something we always do. You can then add it to the template right here. That'll be populated, and it will show you. You'll have to select an allocation method and a cost factor, and I'll show you those later. What's involved there. Allocation method is basically the type of charge. Is it a flat rate? Is it based on weight or quantity? And then the cost factor is what the actual multiplier would be.
And Bob, this is very good to know, because we have customers with 10, 20,000 different templates for all their items. And you would not want to go through and add to 20,000 items, each with a template individually. This will modify that template and roll it up to all the items that template has been assigned to. So this is a highly efficient way to add a surprise vendor bill to a template on a forward-reaching basis.
Yes, the automation tools do become a real time saver depending on the volume of templates that you have. Now, obviously, in a more role separated company where the person entering the landed cost charges bill would not have the authority to modify the templates, these items would not appear. So we're going to work off standard NetSuite role permissions and show these fields or not. So if that role does not have permission to modify these templates, those fields won't even appear in this list here. Okay. All right. This is essentially after we've entered the bill and saved it. You can see the view, and this will show you all of you can see that the estimate field went away. That was really a data entry convenience, but that's no longer here. You'll see that later when we reconcile this. But this does have the differentiator of whether or not it was originally on the item receipt, which will tell you whether or not it was on the template to begin with. So if it was on the item receipt, you'll see a yes here. These are extra charges that were added. And then you can see that we went ahead and added those to the template, or that person did that. So that's what you see here. This, again, as I mentioned earlier, uses a standard NetSuite vendor bill record, but we do, when that landed cost charges bill is added through our application, we do add this little flag here that shows you that it's actually a special kind of vendor bill. It's an actual landed cost charges bill. And so that brings along this increased functionality here. Okay. This will show you some of the other information that we populate. Once that bill is saved, we add a subtab, 8Q ELC for landed costs, and we provide, again, these links to all of the related purchase orders and item receipts. So later on, if someone is exploring this bill and wanted to see some of the source transactions for that, they can jump right from here to those. Those are NetSuite links. We will also, after the reconciliation is done, we'll provide a link back to the reconciliation so they can jump back and forth there, as well as any journal entries that might have resulted from the reconciliation as well. We'll have linked here. So we do provide a rich linking function in between all of these transactions, so you can jump around as needed. This is a journal entry that resulted from our vendor bill for landed costs, where the choice was made to write off any variances to COGS, and we'll jump into that one a little bit later, and we'll see that. I mentioned earlier that there were a couple of other menu options when you're navigating transactions, landed cost charges bills. The one we looked at originally was the new landed cost charges bill here. These other ones list landed cost charges bills. That's pretty self-explanatory. It's going to show you a list of whatever landed cost charges bills are in there, and whether or not they've actually been reconciled. If they have been reconciled, then that record is locked and you can't go edit it unless you go delete the reconciliation and jump through a few hoops, the downstream child transactions. So we're following NetSuite conventions there as far as being able to actually edit something once it's been done. And you also have the option to list the landed cost charges reconciliations as well. There is an additional filter on this landed cost charges bill. When you pop up the screen, it will show you whether or not you want to view ones that have not been reconciled, ones that have been reconciled, or if you want to see both. And then you can choose to update your filter at that point. So pretty straightforward, but that's what those other menu items allow you to do. Okay, so we've bought our items, we've received our items, we've entered a vendor bill for our items, and we've entered a vendor bill for our landed cost charges. Now we're going to reconcile all that and figure out what happened exactly. So from the landed cost vendor bill, there is, let me jump back here. Oops. There is, once the landed cost charges bill is saved as approved, I should say. And if they whatever by whatever approval workflow they may have in place, there will be a button here called reconcile. So you can click that button once you view the landed cost charges bill and jump to this reconciliation screen here. And essentially it's going to populate all of the information from the landed cost charges bill. It will give you the links to the purchase order, what the landed cost charges bill linked back to that, and that is the charges bill for the items. Then there was a landed cost. Oh, I'm sorry. And if there was an additional separate bill, which we didn't discuss that scenario, but you might receive an additional landed cost charges bill that from a third party later that was related to this, but wasn't on the template, wasn't on anything else. And so you can enter that. That'll be shown here as well once all of this is reconciled. Okay, now here's where the person that's doing the reconciliation needs to make some decisions. So this is, obviously a permissioned role that they're going to make some decisions on what they want to affect. So on this first adjustments GL accounts screen that comes up, they're going to decide whether or not they want to automatically create journal entries to write off the variances to cost of goods sold, or whether they want to revalue their inventory and write off the variances to the inventory and average cost. This one just creates the journal entry that you saw a screen or two ago, and it basically creates a journal entry that takes that variance out of the variance account and writes it off to a COGS account. If they choose this option here, that I want to revalue the inventory as well as my average cost, this will generate an inventory adjustment worksheet once this is saved, and that will take the result of the calculations of the variances and add that on to the inventory cost of the items at that given location. So it will revalue the inventory and the average cost at that point. So that's obviously not something to be taken lightly. So the person that's making that decision needs to have that authority to do so.
So will it put it back in? Will it put the rest of the inventory back in bins?
It can. That's another level of feature that they have to select at setup. So right now, the bin option is not selected, and so it would do it at the location level and the item level of that location and take this variance over the entire quantity of product that is of that specific inventory that's in that location for that item.
So anybody that has a WMS system, that needs to be a required, not an option, or else you're going to have a very bad day, aka circa 2018, Jerry.
That is correct. If they have WMS, and that should be a requisite in the conversation. And so, Susie, we should put that on our questionnaire. If they have WMS, we must make them choose the if they want to go to average cost, then they must select the bin option.
Got it.
Good point, Jay.
Yeah. That's Yeah.
We need to know where the landmines are to navigate them well. Okay. On the templates sublist of the adjustment subtab, again, they still haven't saved this record, so they're still making decisions on what needs to happen here. This is where they're going to have the option to update their landed cost templates. Over here, we were deciding what we were doing on a GL level, whether we were revaluing inventory or just writing it off to a COGS account. Here, we're going to decide, am I updating my templates or not? And if so, what am I updating them to? And we give them a couple of options here. Okay, we're going to show them each cost category, what the allocation method that I mentioned earlier, whether it's quantity, percent of value, volume. Volume is actually one that we add. That's not a native NetSuite allocation method. But essentially, we're going to give them the option of an average or a suggested factor. The suggested factor is based upon this shipment. What happened with this shipment? So let's assume that it's sort of a normal scenario, and we think, okay, that makes sense going forward. We might want to update our template based on the suggestion, because this scenario, what happened here, is likely going to be what happens going forward. So we'll tick these boxes here. We provide an average in case this particular shipment is more of an edge case or an outlier, and it's something way different than normal. We'll provide an average of all of the landed cost scenarios that we've had previously, and give them the option, if they want to tweak it a little bit based on the average, that incorporates a little bit of this outlier but doesn't take it all the way. They have that option to do that as well. So they can either change to the average or change to the suggested, and this will update their landed cost, all of the landed cost templates affected by this, and all of the cost categories on there to whatever value they've selected here. All right, continuing on. Okay, now this is going to show them on this other sub-tab. We've done with the adjustments here, made some decisions there. We can look at the PO and item receipt details, and these are links to all of the POs. In this case, there was just one, and there was just one item receipt. But in the case where there's multiples, you'll see everything here. This will be a big long list. Every item that was on there, what the template that was used, the particular cost category that was used on that template applied to that item, what the allocation method was, how many of those items were on the item receipt, what the estimated landed cost for that was, what the actual landed cost for that was, what the template factor was, the factor that's calculated from the item receipt, and the suggested one. So this is what we suggest based on this shipment. So if they've made a selection under adjustments, this is going to be what's populated there. So this is just a quick glance as to what.
There will be quite a bit of focus on this, because each item receipt is being identified here, and you might identify one item receipt and then see that it came from Mexico, and the template was still more of a India shipment, and it will stand out real clear that you need to have a separate landed cost template for that same item when it comes from Mexico than India. And this is an additional value, because you can make this a save search and really do some optimizations of where would be best for your margins to buy your product from.
Definitely. All right, now we've actually saved the reconciliation now. So It's gone and locked all of the associated records, and then we can see all of the different material here. So we've got all links to all of our landed cost vendor bills. We also provide some totals of what the estimated landed costs were, what the actuals were, links to any associated journal entries that we chose to generate. If we chose to revalue the inventory, then you'll see a link to the inventory adjustment worksheet here, and all of that, purchase order, anything else that's relevant here. So then you'll see these tabs have changed a little bit once the record is saved. So you've got your adjustments and your reconciliation templates. So this will show you basically what all of those values were. If we had chosen to update them, it will show you what was updated and what it was changed to here. And if we also look at the GL accounts, this will show you all of the GL accounts that were affected, and whether or not, if we chose to write things off to COGS, it will show you whether or not there was a COGS adjustment here. In this case, yes, no. So you have very granular selections as to all of these individual ones where you want to write stuff off to, and so there's lots of flexibility there.
And about this time, most accountants and bookkeepers for the companies will throw their hands up and say, there's way too many decisions for me to make. That's why we have most of them automated, so that they don't have to go through and granularly look at each of those. We'll tell them via some automated suggestions, and they can continue to do their day job without having to get a new degree on estimated landed costs.
Right. They can either take them or individually, very granularly, or not. It's their preference, but they do have the option to if they really want to dig into the nitty-gritty.
And Bob, we also have a bulk reconciliation piece that will just bring a variety of your items with all those reconciliations together in one. So that just kind of allows you to maybe postpone individually doing your reconciliations and do the reconciliations once a month.
Right. Assuming you don't want to get into necessarily a lot of granular detail and you're just going to save these and batch them all at the end, you do have that option as well. So, okay, this will show you we looked at the adjustments subtabs and sublists, and again we're going to look at the PO item receipt details. We saw that earlier in the before we saved the record, but this is again links to everything. POs, item receipts, what were the items, templates, cost categories used, all the way out, and as much detail as you care to digest. All right. Now we're going to look briefly at the landed cost tools that we provide for the other side of the house, the order to cash side. I had mentioned that there are tools that we provide on the item record as well as the estimates. So if you open up an item record, we add an estimated landed cost subtab here. And there are a couple of standard NetSuite fields that we include: track landed cost and the purchase price and the last purchase price. Those are NetSuite fields, and average cost as well. Everything else on here is ours. So we will show you the data in a number of different ways. We can, this is the estimated landed costs from the purchase price. We'll also estimated total cost from the purchase price, estimated landed cost percentage of the purchase price that includes including the landed costs, In this case, it's 54.76% of the total cost of the item. Based on the purchase price, are landed costs. Okay, so if they'll have the option, pardon me, they'll have the option here to, if they want to play with their margins a little bit, they'll say, I want a 50% margin, for instance. They'll plug 50% in here, and then we will then show them, okay, here's what you need to sell it for to get that margin based upon your landed costs. And we'll give it to them a couple of different ways here. Purchase price obviously can differ from your actual average cost, because purchase price is what you enter on the item record. That's typically what you expect to pay for this. Your average cost is what you actually paid for it on average. So we'll show them the suggested sale price in both those two ways, based on the purchase price as well as based on what they've actually paid over time.
And this is very good for new product onboarding, where you can look at your purchase price that your vendor tells you. You can look at all of your estimated landed cost from your template. You can set your margin, and it will tell you both ways of what your suggested retail price should be. And this will be very helpful for those companies that bring a 20 to 30, 40% new products each year on their inventory. This will be a requisite, because then this can also be part of a saved search, and you can do this for all new onboarded products. And also play with each template that you might want to look at. So you might set up a suggested purchase price, Mexico suggested purchase price, source from India, and then one source from China. And then you can actually get much more granular on your product launches. And especially when supply chain is all screwy and you are not sure where you're actually going to get all of them in a timely manner, this will be very helpful for you to publish pricing and let the customer decide how fast they want to get the product, and you still protect your same margins.
Yes. Now, the landed costs that you see here are based on this template that was selected. And I had mentioned earlier that you need to select one preferred template on the item record. That's what we're using to calculate all of these costs. All of this information here is that based on that preferred template. So if you want to change that, as Jerry mentioned, and explore a different scenario, way over here on the right is you need to change the template to whatever additional ones you have assigned here. That will then change the values that are presented here and allow you to make some other decisions. So we do provide this is for a quantity of one item of this item based upon this template. Okay, and you can see obviously that we have a huge amount of freight. That's because this is a container template, so we're going to get charged for a whole container regardless of how much we fill it. So, we have to present that for a quantity of one item here. That's why you see this as a huge amount, because of the type of template that was used. Okay, we also have some additional weight and volume fields, because we do add volume calculations to this for containers. So if you choose to add a volume calculation to your template, you are required then to add to populate these fields, the appropriate fields, in here. So if there is a weight requirement in your template and you assign that template to the item, you need to add weight characteristics to it. If there's a volume component, then you need to add volume characteristics. And you do have the choice. We provide the choice of either metric or US customary. You can't mix and match them, so it's got to be one or the other. But you may have a container that uses metric, and if so, we'll automatically switch those things. If you had entered a US based before, we'll flip those to metric and redo those calculations for you and vice versa. Okay, we also provide the same tools in a little bit different format on our estimates. So if someone is doing an estimate, within NetSuite, preparing an estimate, we'll include these on the line item of the estimate, so they can then select this. The preferred template will come up by default for the item. And they can change that here. There's a drop-down list, so they can change to any one of the other templates that are available for that item, and then decide what margin they're shooting for, and play with some scenarios there. So then that'll show them then the purchase price with the estimated landed cost based on their template, and based on the average cost and all of that. So they can make some intelligent decisions if they're preparing an estimate that their customer wants very special pricing, so to speak. And they could source this based on different landed cost scenarios, perhaps from different companies, via different ship methods. They can play with these different scenarios within the estimate template here. Obviously, this is more of a sales management function, not a salesperson function. So we would need to set the appropriate permissions accordingly there. But this gives them a lot of flexibility if they're sharpening their pencil and deciding, hey, we're going to take less margin on this, but I really need to drill in and know exactly how much this is going to cost me. And if they want to really squeeze me on price, then it's going to be a longer lead time, and it's going to come from China versus Vietnam or something like that. So it allows you to develop pricing scenarios based upon the margins you need to hit for your client, as well as cover your own costs and make the margin that you need to.
I recognize this. I know where this came from.
Yeah, I bet. But this is baked in as well. We also provide the option to include images on the estimates if you want to do that. So we did this for one of our clients, original clients for this software, who happens to do Christmas decorations, obviously. All right. Any questions on the operations side before we jump into setup? Okay, so we've saved setup for the end because it's not necessarily very glamorous, but it is a critical piece of it. And if we wanted to jump through it with the client, we could do so here. We provide an estimated landed cost setup screen, and this is accessed through setup, custom, and then there'll be an 8Q ELC setup option there. We basically if they tick this box, they can simply copy the original vendor bill date to the new landed cost charges vendor bill date if they want to do that. We give them the option of a variance account here. We're going to require a variance account. This is a COGS account, and this is if they chose to not revalue their inventory via the inventory adjustment worksheet, and they want to write off any variances to COGS. This is where that's going to go at the end of it. We give them the option, and Jerry had mentioned the bulk reconciliation. If they want to simply, automatically do these various things, they can set it up as defaults here, and we'll automatically take those steps for them. If they want to automatically do the GL adjustments to COGS, if they want to revalue their inventory, all of that sort of stuff can be selected here. Also, whatever roles are authorized to do various things within the system. In this case, we had GL adjustments, but there will also be the template updates will appear here as well. So if there are multiple roles involved, they can kind of segment who gets to do what within the system here. Now, I had mentioned that we want at the beginning that we're going to set up 3 different types of accounts. And here you see those 3 accounts. We have variance accounts, suspense clearing accounts, and COGS accounts. The first 2 are located in the other asset category, and Jerry can explain this far better than I can. But we're basically these suspense or clearing accounts are going to be what we use primarily to hold the expenses as they walk through the system. So the estimated at the time of item receipt, these accounts are going to be hit with those landed cost charges. And then once again with the actuals, and any resulting variances are going to end up over here. And then depending on what they decide to do, whether they're going to affect inventory, then these are going to be washed out and affected to inventory. And then if they choose to write off the variances to COGS, those will be cleared off to this area here. And then there is a missing account that I need to add, which is basically any charges that were added that were not on the original templates. Obviously, we can't clear those through the normal process, so those will have to be all parked into an expense to COGS over here. And then that's probably as deep in accounting as I'm
That's good enough.
legally allowed to go.
Yeah,
So
that's good enough. Good enough, Bob.
yeah. Okay. Now, once we have our GL account set up, we then need to create landed cost categories, as we talked about. And again, these are a 1-for-1. We have landed cost brokerage fees. We're going to name them the same way all the way across, just for clarity. So in our inventory suspense account is going to be landed cost brokerage fees. Our variance account is going to be landed cost brokerage fees, and our COGS account is going to be the same thing. So pretty straightforward. We always know what we're looking at and where it goes. Now, the app, as I mentioned, is automatically, once we create a cost category, it's going to create a corresponding, what we'll call a landed cost item. Come on, switcheroo here. Okay, my system seems, there we go. All right, it's going to create a corresponding landed cost item, which is an other charge for purchase item. It's going to be named exactly the same as the cost category, which will be named the same as the GL accounts and all of that. So we always know what we're looking at. It's going to have the appropriate accounts there because that's where we're going to take things. Okay, once we've created our cost categories and the app has created our items, we can then assemble those cost categories into the templates, which again are collections of cost categories for a given shipping scenario. So we're going to add whatever we need for this scenario, whether it's customs or duties, freight, handling, whatever goes in here. We're going to select an allocation method, whether that's a percentage, whether it's based on weight. And again, we'll need to put weight characteristics in the item if we do that. A flat amount, these are volume, and we leverage the NetSuite flat amount charge to calculate volume. And then you select this is the charge for the container. For a container in this case, you select a units type, whether it's cubic meters or cubic feet. How big is that container? And that will then allow you to do those volume calculations. We also have the option to apply these to matrix items, and typically it would best to do this at a matrix parent level rather than assign, you know, a template to a bajillion matrix children. So you have the option here, if you're going to apply landed cost to a matrix item, you can simply select it at the parent level here, and then only apply it to the parent item. And even when those children items are received, they'll be processed accordingly with their parent template. Okay, once we have our templates defined, we're then going to assign them to an item. And again, you can have a virtually unlimited amount of templates assigned to an item. And you can see that here's a list of them from the item record. It's on the sub-tab landed cost template mapping. And one of them is selected as preferred.